Hi everyone, and thanks for taking the time to listen to this short audio file. Something that I've been wanting to put out for a little while. 2020 has certainly been a year of firsts. You've heard me talk about it in the past, and one of the hot topics of this year really has been around COVID, yes, but obviously around the commodity space. In particular, gold has been getting a lot of attention, and to a lesser degree, until right now, we're seeing a bit of interest in the silver space. So for me, I thought I'd sit down with someone who I've known for a few years, which I'm very thankful to be able to say I call him a mate, but also a very educated guy and running a really good business here in Adelaide as well. Todd Williams, Managing Director of E2 Metals, ticker code E2M. They're a gold and silver explorer. I won't go into too much more detail. I'll leave that for Todd. But mate, thank you for taking some time.
Thanks, John. Thanks for, putting this together and inviting me to come along and, spread the E2 story.
So let's start with that. Tell me a little bit about E2, your journey and the journey of the business.
Yeah, I guess the really high level overview is E2 Metals is an exploration company. So we create value through exploring for and discovering minerals. We've got projects in Argentina. So we've got projects in the Santa Cruz province of Argentina, down in the southern part of Patagonia. And I guess what we do is we explore. And so at the moment we've got drill rigs turning and we're testing some really exciting gold and silver targets.
And are you finding, I guess, over the last 12 months with what we've seen to be a massive rally in gold, that there's been a renewed interest in gold as a wider commodity, but obviously in what you guys are doing?
Oh, absolutely. So I think, as a micro cap junior, essentially what drives the industry is the perception of the prize at the end, with gold going from, essentially $1,000 an ounce in late 2015 to, up to $2,000 an ounce now recently, that all falls on the bottom line of the mining companies, not only in terms of like net asset valuations, but also in terms of earnings. And so, the size of that perceived prize trickles down into the explorers because at the end of the day, if we do find what we seek to find, it's wildly valuable in a normal market, and in a good market, it's wildly valuable at a multiple of 2 or 3 or 4.
Yeah.
So, look, I guess what we say is, as exploration companies, we're essentially starting at a baseline of zero value. And our job is to create, step change value from essentially nothing. And then overlay on that positive movements in the underlying commodity price. That is baked into the cake for free for our investors. And at the moment, it's one of those times where you're getting some very explosive positive volatility, I would say.
So for those that might not be familiar with what I do at AFFINTAS Capital, because I know this audio is going out to a pretty diverse group, we work with a group of clients who have strategy needs, who have insurance needs, but obviously a big part of it is building out and managing portfolios. And the space that I play in is your Aussie equities, your international, and we manage diverse fixed interest for clients. I say I'm more conservative in nature, but I have a pretty broad knowledge of the wider market. But what has come up time and time again this year has been this renewed question around what's happening with gold and silver. And my knowledge is good, but I feel your knowledge is great. We spoke a little bit before we started recording this, and the history and the background around gold and the values of gold. But let's narrow that window of information down. Let's talk about maybe over the last 12 months in the COVID world in which we're in. What have you seen on the markets at the high level? What have you seen from both maybe a gold and, if you can, a silver perspective over those last 12 months? What's been, for those that haven't been watching, what's happened to those two commodities?
Sure. I guess I would preface that with, I am a geologist, so I'm a geoscientist by background, and I do have a keen interest in economics and, the price of gold and silver, because that's the sandbox I play in. But I guess I discuss the economy and gold and silver as an economist would discuss plate tectonics.
Yeah, right, got you.
So I guess the point is, yes, I have an opinion. It's a very informal and high-level opinion, but nevertheless, I enjoy sort of exploring the concepts and trying to organise the themes of gold and silver and how that's progressed with time. And I guess what I see at the moment is, the first question we have to ask as investors is, can the price of gold and silver go higher from its current levels today?
Yep.
And so if you look at history, it's always good to start zooming right back and have a look at what's happened in time. There's essentially been two major gold and silver bull markets in the past 50 years. The first was in 1970 to 1980 when President Nixon in the US essentially removed the convertibility of the US dollar to gold. So at that point, you could go to a bank and take 35 US dollars into a bank and they would give you an ounce of gold. But because of the Vietnam War and I guess the need to fund the war effort and print money, Nixon decided to remove the convertibility of gold and essentially created a floating global fiat currency, because at that time every other currency in the world was pegged to the US dollar, which was then pegged to gold. So it was a huge experiment in terms of removing the convertibility of gold and allowing fiat currencies to operate as what they call soft currency economics. And so what happened then was essentially gold ran from $35 an ounce to over $800 an ounce in 10 years. So if you work that out in today's context with inflation, in the 1970s, a house in Sydney was worth $50,000. Now it's worth 1.1 million.
Yeah.
So you look at $800 in that context, it actually converts to around, $12,000, $15,000 an ounce.
Yeah, right. Yeah.
So what we're sitting at now in the sense of, $2,000 an ounce, can it go higher? Of course it can go higher. Absolutely it can go higher. And really it's just, for me, it's a question of, how much inflation, the sort of the speed and the magnitude of that inflation.
Yep.
And I guess what I would say to most investors is that it's about having an awareness of time scales. In the past 50 years, there's been periods where it's been great to own gold, and then there's been periods where it's been horrible to own gold. From 2011 to essentially recently, it's been a horrible period to own gold. And I guess my high-level thesis is that over the next 10 years, it's going to be an exceptional period to hold gold.
Yeah.
So that's it in a nutshell.
Yeah, look, I think that's a good point. I mean, looking forward, we're definitely in a different environment at the moment than we've seen in a very long time, with the printing presses being turned on globally, interest rates at record lows. There's talk of an interest rate cut in Australia this month or next month. We're in a unique space, and I think that's what's causing that attraction to gold. And for my clients, there's various ways that you can access gold exposure. Some like the physical element and still holding some physical gold in a safe, in a bank. I think a few still do that. But there's various ways of buying gold on market, for example. And there's definitely a renewed interest in that. And I think my clients are using it as a diversifier amongst a portfolio of various stocks and equities and fixed interest, as either as a buffer, but just mainly as a diversifier in that commodity space. But
well, can we riff on that for a
Yeah,
second?
absolutely.
Like, for example, I guess the competition to gold is fixed income, yeah?
Yeah.
Like, why hold gold if, a 10-year treasury is paying 4% interest? And the answer is you don't. And there's periods in history where, interest rates are high and the interest in gold is just, it's decimated. When Paul Volcker, the chairman of the Fed, increased interest rates to whatever it was, 18% in the 80s to try and break the back of inflation that was caused by Nixon removing the convertibility of the US dollar to gold, that was a 20-year hiatus. in participation in gold as an investment. No one wanted to own gold because they were getting, 15%, 18% for holding cash in a bank.
Yeah.
Why would you?
Yeah.
And so if we riff on that concept, what is the competitor to gold? Well, it's fixed income. When you're getting 50 basis points for the 10-year treasury now, and really inflation needs to run hot to try and remove the debt burden that the globe has, you're essentially looking at negative to low yields for holding cash. Ray Dalio come out and said cash is trash.
Correct.
And so you've got this barbell, portfolio management theory, which, you're a financial planner. Everyone grew up with the 40-60 rule or whatever it is, or some variation of. And so if all you do is look at that 40% of money that used to sit in fixed income, which is now sort of negative or zero interest.
Correct.
And that shifts into hard assets like gold, well, there's huge upside there just in terms of the increase in participation. And then if you want to riff on that concept further, like, if I guess monetary policy at the moment is to lower rates to stimulate the economy and also flood the system with liquidity. So that's there's two components to that. Yep. So if we look at lowering rates, as we said, the interest payable on a 10-year treasury bond is pretty much zero when you factor in inflation. And so then if you look at stocks, well, let's add a risk premium to stocks of, let's say, 4%. So now we're happy with a 4% return on our stocks, our public equities. But then we throw lots of liquidity into the system, which the Federal Reserve is doing.
Yeah, that's what we're seeing.
And essentially we're seeing lots and lots of cash chasing very few companies, which is compressing the risk premium people are willing to pay. So, in essence, what we're seeing is PE ratios trending towards infinity. Because if you've got a negative 2% real return, not nominal return, but real return on your fixed income, and you're happy with a 2% premium for your higher risk investments in public equities, well, essentially PEs are trending towards infinity. So the concept, the thesis or, the philosophy around investing at the moment is completely distorted. I don't believe you can short equities. You have to be long equities because, who knows what the Fed is going to do? Who knows where monetary policy will take us? But that's even more reason why you have to own gold.
Yeah,
if that makes sense.
Yeah, no, look,
so it's not a conversation around do you hold gold versus equities? Do you hold gold versus, fine artwork or whatever it is? It's more of a question of cash is trash, as Ray Dalio says. We're moving into the everything bubble, which is, the Federal Reserve just basically printing heaps of money and throwing liquidity into the system. So more than ever, people need a portion of their wealth allocated to gold at a time when, for the past 20 or 30 years, it hasn't been, I guess, important to own gold. And so we're really seeing, I think, a tectonic shift in portfolio management.
So I think I just ended on a couple of points. I look at the clients that we look after. They're all typically business owners, professionals, medical professionals, and self-funded retirees that are sitting on significant and diversified portfolios. The overarching theme with most is they're looking for growth. They're looking for opportunities to get capital growth. Some have income requirements, but I think many still fall in that growth profile. Talk me through maybe how you think E2 metals could be a value add for a client's portfolio. For someone looking for growth, I think is E2 a place to look for when they want that gold exposure and that growth opportunity?
Sure. Well, I think just to qualify, E2 metals really isn't an investment, but it's a speculation, and I'm quite happy to say that because
no, good call.
We don't generate investor returns. We don't aim to create 2% yield over the next 10, 20 years. Like my job as the managing director of E2 is to take it from a 20-cent company to a $2 company through step change, value and success, you know.
Yep.
And really, if you are looking to diversify your portfolio and put a bit of money into, you know, let's call it speculation, you cannot go wrong at the moment looking at high quality exploration stocks. How do you define high quality exploration stocks? Well, in you know, my theory is there has to be a large perceived prize. You know, for E2 Metals, we are exploring in the shadows of one of the largest gold and silver deposits in South America. So the perceived prize there is clear. Our exploration is advanced in that, you know, we've done enough work to know there's gold and silver there. And so we're really in this sort of fun inflection point, if you will, where over the next 6 to 12 months, you know, we're either going to be successful in demonstrating our thesis that we've got, you know, a brand new gold and silver discovery, or we're not. And so, look, that's the type of investor that's attracted to a company like E2 Metals. But look, you know, if you have a look at the wealth generated through mining and exploration, and you know, let's look at the billionaires in Australia. It's hard to find, you know, one that's not connected in some way to the mining industry.
Yeah, you're spot on, especially in Australia and even globally. We're seeing obviously a huge interest, and I have done for many years, I guess, in what we're doing over here and what we're pulling out of the ground, and that then flow and effect to global projects as well. So
absolutely.
Todd, I think, mate, you've answered it very well for me. I think your knowledge of gold is exceptional. I think the obvious thing to me is that there's absolutely value in holding gold right now. People need to understand the story, make an educated decision. But I encourage you to either reach out to myself or reach out to Todd direct, and explore that conversation further if you want. Mate, I just thank you for taking the time to unpack what has been one heck of a roller coaster of a year for gold, and I'm sure another one in 2021.
Well, that's right. And looking forward, my predictions are E2 good for a discovery and Port Adelaide good for the flag.
And so that's where we end. We stop recording. Thank you, mate. Appreciate it.